The situation in China is going from bad to worse. Like I've been covering extensively on this channel with what's going on with Evergrande, with what's going on with China's housing bubble and how big, how bad, and how much shadow debt there is, we have just got some new data to confirm today that the downturn has officially begun. And for those of you that don't know or have been living under a rock in the financial markets, in China there is a big developer called Evergrande. And kind of like Lehman Brothers, this company had $300 billion in debt. Now, many people were saying that they're going to get bailed out, which I said they probably won't because China wants to let the housing market crash. And what happened recently over the past couple of weeks, Evergrande did officially default on their debt bond payments. Evergrande being the biggest developer in China, this is going to have ripple effects on the whole of China's housing market, and we're now starting to see other developers like Keisha and other developers like Shimao starting to drop like flies. But I've already covered the developers extensively on other videos. In this video, I'm going to go over the latest data that we just got that shows the $62 trillion housing bubble in China, which makes up to 30% of China's GDP and up to 70% of people's wealth, is now starting to fall. And like any country that pumps all their money into one asset class or one industry, it does not end well. So everybody, let's not waste any time. Let's get straight into the news, the facts, and the data. Look at this, everyone. China's home market slump persists as prices and sales fall. Intensifying home market downturn raises concerns over growth. Wait and see buyers threat financial health of developers. So this is huge, everyone. Prices are starting to fall and sales are starting to fall, because what happens in every market is it doesn't just go from all of a sudden prices going up 10% to then falling 10%. What happens in normally the housing market with financial markets as a whole is price gains will start to fall. Then we'll start to see small price declines, and then people see all of a sudden, hey, the market's not going up. I'm going to wait until prices fall further. And this is what's now starting to happen in China. So China's property industry slump persisted in November as home prices fell for a third month and sales dropped, hurting growth in the world's second largest economy. Now look at this chart, everybody. Now we have to look at the trends. We can see in 2018 over here, house prices were going up through the roof. But remember, the trend is your friend until the end. Look at the trend. Price growth is starting to decline. And now what do we see here since September, when all this Evergrande situation started to unfold? Look at this, September fell, then again it fell in October, and now look at December. You can see here the trend is that the price declines are accelerating. And you may think, well, this is not that much, just falling down 0.3, 0.4%. It's not a big deal. Again, people, it doesn't go from 10% gains to 10% falls overnight or month to month. It starts to slowly trend down, but as the declines accelerate, fear sets in, then it's like a snowball effect. The falls start to get bigger and bigger. So new home prices in 70 cities, excluding state subsidized housing, declined 0.33% last month from October, when they fell 0.25%. But listen to this, home sales slid a further 17% from a year earlier. They say, well, this is a big improvement from falling 24% decrease year over year in October, but this is still a massive fall in home sales, because I don't know who would want to buy one of these off the plan shell apartments right now. And sentiment in China's home market has been dented by a cash crisis among property developers following a regulatory clampdown on excessive leverage in the industry. Officials have eased up in recent weeks as their priority shifts to shielding the economy from the slowdown. So what this is talking about is the 3 red line rules that were implemented to stop this crazy leverage in the housing market, with these property developers taking on way too much debt. But also this downturn and all these other property developers defaulting has caused fear in the bond market in China, and the junk bond yields have been skyrocketing to up to 25%, meaning these developers can't afford to repay this interest, and this is causing a domino effect and causing contagion and triggering other developers to default that would normally be in a healthy situation. And listen to this, an investor sell-off of China's embattled developers deepened this week following anxiety over financial health of Shimao Group Holdings Ltd, which was considered to be one of the sector's strongest players. Financial markets had largely shrugged off the bond defaults of China Evergrande Group and Acacia Group Holdings last week. So you may be thinking, okay, maybe this is the worst of it. Maybe it's going to get better from here. Well, the experts don't think so. The market for new homes has yet to bottom out. China Real Estate Information Corp analysts wrote in a report last week, adding that cash-strapped developers will likely resort to heavier discounts at the year end. So what it's saying there is these developers, they need cash, and they need cash as soon as possible. So they're going to have to heavily discount these projects in order to get cash to repay their debt obligations. So China's housing downturn is fueling concerns over economic growth, given that the sector, like I said earlier, accounts for a quarter of gross domestic product. The central bank eased monetary policy this month, and economists expect the Communist Party to order more fiscal spending next year. So this is now going to be the real test for the CCP and China's central bank to see how much pain they're willing to tolerate, because we're starting to see the central bank panic, and look what they're doing now. Chinese central bank injects the most cash in 2 months, triggering gains in bonds. So the Public Bank of China added 190 billion in yuan via 7-day reverse repos. This is a move to help alleviate the liquidity crisis that is going on right now. But in an annual Central Economic Work Conference last week, the party's top decision makers maintained a basic stance that houses are for living in, not speculation, dampening expectations for property stimulus. And hey, this is something I absolutely do agree with them. Housing shouldn't be allowed to go up, crazy levels of 25-30% we're seeing in some housing markets around the world, like in the US, here in Australia, and in Canada. Now, I'm not saying they should ban investment altogether, but there has to be something seriously done. Otherwise, you're going to find more and more people homeless on the streets, because even the affordable housing markets are becoming unaffordable. But everyone, what does this all mean for you and me in simple terms? What this means is this downturn in China is only just beginning, and we have to keep a very close eye on this, because like I keep saying, this is the biggest housing bubble we've ever seen. It is off the charts, with some of Chinese cities having house prices 45 times the average income. And like I keep warning about, China is the second biggest economy in the world. So like in the global financial crisis, when the US went down, this had a big effect on the rest of the world. If China goes down right when growth is weakening in the US in 2022, this is going to cause global growth to fall in 2022 for everyone, and we're all going to pay the price. So everyone, that was a quick update with what's happening in China, a little bit of a different format today. What do you think about this format? Do you want me to go back to the original format? Let me know. Now, for all my loyal viewers and subscribers still watching, you're awesome. Thanks for watching. I'll see you in the next video.